Buying a stock is easy, but buying the right stock without a time-tested strategy is incredibly hard. In this video, I have listed the 12 best-performing growth stocks you can buy now. To compile this list, I consider the revenue and earnings growth rates over the past year and the prior year, price-to-earnings ratios, and dividend yield over the past year. First and foremost, how does growth stock work? Imagine investing in a stock and you notice your earnings are generated faster than the average stock in the market. This means you invested in a growth stock, and growth stocks come with a substantially higher growth rate compared to the mean growth rate prevailing in the market. That's a simple explanation of how growth stock works. Now, moving on to the top 12 growth stocks you can invest in. Number 1. Alphabet Incorporated, ticker symbol GOOGL.
And even though Microsoft, with its cloud business, Azure, grew 29%, so they gained some share, it's still pretty robust growth by Google. And I actually think that the reaction today, down 7% on a miss that was about $20 million on an over $8 billion number, is a gross overreaction. I actually think Alphabet's a pretty compelling buy right now, today.
First, Google's parent Alphabet is one of just 5 publicly traded companies with a valuation of more than $1 trillion. It is a well-established big tech giant offering a wide range of Google-branded services, including Google Cloud and the Google Play Store, its popular search engine and smart gadgets, Pixel smartphones, and YouTube. JP Morgan recently named Alphabet a top stock for 2024, citing improving ad growth, higher margins following successful cost cuts, and artificial intelligence. Here's their chart. Let's check it out. Number 2. Discover Financial Services, ticker symbol DFS. With the probability of a soft landing increasing, businesses such as Discover should be well-positioned to reap the rewards if the economy escapes a recession. It is a slight credit card issuer compared to major players in the market, like American Express, MasterCard, and Visa. In contrast to most issuers, Discover also loans money to consumers instead of just taking a cut of every transaction. That means the health of the American consumer is paramount to its success, and thankfully, the American consumer is strong. This chart shows their recent performance so far. Number 3. Walt Disney Company, ticker symbol DIS. Next, a return pick from last year's list. Disney is a global entertainment giant with a diversified portfolio that includes its parks, cruises, broadcast and streaming platforms, film studios, and well-known platforms like ESPN and Disney+. Led by renowned CEO Bob Iger, who returned to the top spot in late 2022 after costs had spiraled out of control, the House of Mouse recently announced that it would be growing its cost-cutting goal by more than 35%, from $5.5 billion to $7.5 billion. Currently pushing for 2 board seats at the company, activist investor Nelson Peltz claims the board is too royal to Iger. This is Walt Disney's recent performance. That said, Iger's leadership has led to some of the company's savviest acquisitions, which include Pixar, Marvel Entertainment, and Lucasfilm. Morningstar's Matthew Dolgen believes Disney's streaming divisions, Disney Plus and Hulu, and in the future, ESPN Plus, should soon start making up for steady declines in Disney's linear TV properties, which still account for meaningful revenue. Dolgen assigns a fair value estimate of $115 per share, which closed at $92.02 on December 21. This is one of my favorite growth stocks out there. What is your favorite growth stock? Feel free to share your thoughts in the comments section below. Number 4. Amazon.com Incorporated, ticker symbol AMZN.
I think that over the long term, Amazon could have a business model that gives net 5% of its revenues as distributions to shareholders as value creation over time. And I think that is a number that few would argue with. After repurchasing 2% of shares every year,
Amazon, a massive cloud computing and e-commerce player, has been one of the best-performing growth stocks ever. Regretfully, since revenue growth slowed to just 12.6% in the most recent quarter, Amazon shares have lost 2.8% over the previous 3 years. Analyst Arun Sundaram claims that although Amazon's growth may be weaker than it once was, the company has evolved into a very successful cash flow machine. Check out this chart showcasing their recent revenue as of 2024. He projects 13% revenue growth in 2024, including 25% advertising sales growth and 17% Amazon Web Services revenue growth. CFRA has a buy rating and a $180 price target for Amazon stock, which closed at $151.71 on January 17, 2024. Number 5. Meta Platforms Incorporated, ticker symbol META.
What is the best way that investors can anticipate and kind of encapsulate how Meta Platforms is going to really give or set a theme for this year?
It's funny you say making it rain. They were already making it rain last year. You had roughly 28 billion in capex. You already have guidance for 30 to 35 billion. That's a lot of that AI investment. So we're going from, call it slight downpour to bigger rainstorm this year.
Meta Platforms is a market leader in social media and online advertising and owns Facebook, Instagram, and other platforms. Following a run of 3 consecutive quarters with negative year-over-year revenue growth to the end of 2022, Meta's growth turned around in the first half of 2023, registering an impressive 23% in the third quarter. According to Zeno, Meta's profit margins are rising, and the company's stock has an appealing price and several impending growth drivers. He projects 13% revenue growth in 2024. CFRA has a buy rating and a $390 price target for Meta stock, which closed at $368.37 on January 17, 2024. Here is the Meta Platforms chart view. Number 6. Match Group Incorporated, ticker symbol MTCH.
Again, the combination of revenue growth and being smart on cost is really driving a springboard effect, which we're starting to see in the numbers as well, able to raise margin expectations for the full year, and it gives me optimism longer term as well.
Online dating giant Match Group has had a rough go of it recently, slumping in 2021 and 2022. A big part of its multi-year decline was simply the inconvenience of rapidly rising rates and an already overvalued stock that, as recently as 2021, was trading for 132 times forward earnings estimates. However, let's see their chart overview as of 2024. That figure was too high, but Match's current forward price to earnings ratio of 16 is low. Match owns premier online dating brands like Tinder, Hinge, Plenty of Fish, OkCupid, and Match.com. For a company expected to grow earnings at a 26% compound annual growth rate over the next 5 years, Match looks like a company to swipe right on in 2024. Number 7. Grupo Aeroportuario del Sureste, ticker symbol ASURB. Grupo Aeroportuario del Sureste, a Mexican airport operator whose stock was up 34% in 2023 through December 21, retains its spot on U.S. News list of the best stocks to buy for a third consecutive year. This came after a 17% gain during the bear market of 2022. A company's impressive past performance does not always translate into a buy recommendation. Rather, a stock's valuation, in combination with future macroeconomic prospects, determines whether or not it is a good investment for 2024. Grupo Aeroportuario chart of awesome performance proof 2024. Number 8. Target Corporation, ticker symbol TGT. Like its products, TGT is trading at a very fair price, even though it might not be the most exciting stock on the list. Target trades at a significant discount to other discount retailers such as Walmart and Costco, as well as bargain bin stores Dollar Tree and Dollar General, at just 15.4 times forward earnings. That seems unjustified, especially for a company expected to grow earnings by more than 9% in 2024. 2023 was a rough year for the retailer, which shuttered 9 stores supposedly due to high levels of retail theft. It also suffered the wrath of intolerant customers who began boycotting the retailer for acknowledging Pride Month in its stores. Historically, TGT has weathered recessions well as consumers penny pinch and seek out deals at the big box store. Target also serves as one of the more defensive picks on this list. Income investors will also find something to like here, as Target pays a 3.2% forward dividend. While 2023 was tough for shareholders, the stock entered 2024 with momentum, following a third quarter report that topped earnings and sales expectations, sending the stock up more than 17% on the news. Let's have a look at their chart view. Number 9. Advanced Micro Devices Incorporated, ticker symbol AMT. Despite the remarkable 3,732% rise in Advanced Micro Devices stock price over the past 10 years due to its microprocessor and graphics semiconductor business, Zeno thinks the company still has room to grow, especially considering AMD's central processing unit data center servers. Although AMD's revenue growth in the third quarter was only 4.2%, its net income rose by 353% compared to the prior year. Let's have a look at their chart. Zeno predicts that new product launches and an enhanced product mix will increase AMD's margins in 2024. He projects a 21% rise in revenue by 2024. For AMD stock, which closed the week at $160.17, CFRA set a price target of $150 and a buy rating. Number 10. ExxonMobil Corporation, ticker symbol XOM.
ExxonMobil is the second largest oil company in the world with over $400 billion of top-line revenue. In last fiscal year, they made $76 billion of adjusted free cash flow. Now, how much is this stock worth? The oil market is expecting oil prices to come down a little bit, but with global tensions, who knows what's going to go on?
ExxonMobil is the largest U.S. oil major. Oil majors aren't traditionally considered high-growth stocks, but favorable energy market conditions in recent years have made oil stocks some of the highest growth companies in the market. Exxon reported a 19% year-over-year drop in revenue in the third quarter. However, revenue was still up about 23% on a two-year basis. Analyst Stuart Glickman says Exxon should benefit from property development in the Permian Basin, and its proposed acquisition of Pioneer Natural Resources will also be a growth driver. CFRA has a buy rating and a $121 price target for the stock, which closed at $96.98 on January 17, 2024. Here is ExxonMobil Corp's chart performance ranging from 2020 to 2024. Number 11. Tesla Incorporated, ticker symbol TSLA.
I know 15,000 a share is not your base case.
No.
It's your reach case. What is your base case?
The base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
Next is Tesla, a leading U.S. electric vehicle manufacturer. Tesla's revenue growth slowed to 9% in the third quarter, and automotive segment revenue growth was just 5%. Analyst Garrett Nelson says Tesla's new factories in Texas and Germany, coupled with the rollout of the Cybertruck, have set the stage for Tesla's next growth phase. Nelson says that non-union Tesla was a relative winner of the most recent United Auto Workers strike, and he estimates that Tesla has more than 2 million Cybertruck reservations. Here is the Tesla performance chart view. Nelson projected 30% revenue growth in 2024. CFRA has a buy rating and a $300 price target for TSLA stock, which closed at $215.55 on January 17, 2024. Number 12. Citigroup Incorporated, ticker symbols C. The last name on this list is the third stock that's a repeat pick from 2023, Megabank Citigroup, a value stock trading at roughly 8 times forward earnings and paying a healthy 4.1% dividend. Citigroup is up 17% year-to-date through December 21, including dividends. Although that indicates that Wall Street has given the stock some love, the rally hasn't been sufficient to eliminate Citigroup stock's discount to book value. Maybe that's because the business is implementing a turnaround plan involving cost-cutting and selling non-core operations. Both good things and Citigroup's reorganization take time. In the interim, Buffett's Berkshire, which began purchasing the stock in early 2022, will continue to hold the shares. Analysts also think Citigroup could be a steal. Morningstar has a 4-star rating and a $66 fair value for shares, implying a 30.4% upside from its closing price of $50.60 on January 21, 2024. Let's have a look at their recent performance. That's it for today's video, but stay tuned as I continue to bring you valuable content that can help you navigate the investing world. However, what do you think of these lists? Please share your thoughts in the comments section below. Don't forget to like, share, and subscribe to my channel so you won't miss the next video. See you on the next one.